few people who can do that way, and and get it right so consistently. But he's able to do that. He's a gut fundamental value investor. He says he only invests in businesses he understands. But he has intellectual horsepower that just dwarfs most guys in business. I'd like to say we only invest in businesses we understand, but I got to tell you, we invest in a lot of businesses. We think we understand them when we go in, but oftentimes you find out maybe you don't. But I think it's a good philosophy. He is a value investor, so when I think about the world in terms of 5 years, he buys companies. He just buys them. He doesn't sell them typically. And look, we all try to be like him. So I would try to describe our philosophy as similar, I hope. We probably get into more, we have a broader mandate, so we'll get into really venture stuff. But venture stuff, like we've invested $400 million into a company to go do deep sea drilling out in Latin America. And I know with what's going on in the Gulf, that's not necessarily a good thing to say, but we do things like that. We invest in wind farms. He doesn't do that. He stays with kind of steady businesses that have been around for a long time that he understands really well. We probably have a broad mandate. We all hope.
But you also sell.
We also sell, yes. But think about it. When we go back to the funds that I talked about, I invest out of a $20 billion fund. Our investors have committed to giving us that $20 billion, and we've committed to investing that over a 5-year period and then giving it back to them over the next 5-year period. So that's the deal we have with our investors.
Jack, first of all, thank you for the kind comments. It's a terrific story. And I will reiterate what Jack said about the business analyst. I have, the years I've been interacting with him in his organization, I've learned so much. The integrity of all those things. I'm sure I've learned more from them than I was in this room. I spent many an hour. The scary thing about all that is most of them were born after I graduated. I have a follow-on to the Warren Buffett question.
Don't show your age.
Yeah. He always says you want to be investing when others are selling, and you want to be buying when everyone's selling and selling when everyone's buying.
Right.
And you look at that curve you showed about the investment profile. It's just the opposite. People want to invest when things are great because they're going on forever. But he has the patience to wait through this stuff. Your investors, I'm sure, put pressure on you to invest the money they've committed to you. You can't say to them, well, we'd like to wait 3 years till the next cycle. How do you handle that kind of problem?
I think it's a great question. Bob's asking about the pressure for us to invest, and also, we all know that buying when everybody's selling and selling when everybody's buying is fundamentally the right thing to do. Let's be clear. We all know that. We also you do have pressure when somebody gives you money to invest. If you don't invest it, I would say you can have conversations with them, right? I think you can stand up to your investors and say, we just don't see the opportunity set. And they'll believe that. But I have to tell you, we all get the fact that you want to buy when everybody says blood in the streets or when there's real chaos out there. And you know that up here. You absolutely do. I have to tell you, having gone through now 2 very deep and dark cycles, and I told you that my first major investment that I drove was in 2001. The world was coming to an end. You felt terrible making that investment. By the way, I made $500 million in that investment. We made 4 times our money on that $160 million because we bought it happened to be a really bad time for companies. And then when the times got good, we were able to sell, and it made sense. It is very challenging to do that because you're hand-wringing, and it's always difficult to commit capital under any circumstances. But when you look at numbers that you're expecting to fall, it's human nature to have a really difficult time doing that. Even though all of us sit there and know it's a good time to buy because you just don't know how bad things are going to get. Meanwhile, you go back to when the equity markets were rallying and the leveraged buyout market was rallying. And by the way, those companies we bought, a lot of those were very good companies we just never had access to that will still do well. We'll make decent returns. We won't make the same returns as we made in the companies we bought in the tough times. Like the company we're just investing in now, last week, this is not a bad time to buy into businesses, I think, because it's a tough economy. I'll only know that when I have hindsight, but it does feel like now is not a bad time. I have to tell you, Bob, the difficulty is it's just human nature. It's just, there's always a reason not to do something, whether it's an investment or anything else you do. You can always come up with 6 or 7 good reasons not to do it. And when there's real chaos in the streets, it's hard to put the money away. Now, having said that, when we look back over the last, let's put it in this shorter context. Fourth quarter of 2008, first quarter of 2009, the world was coming to an end. It was going directly to zero. We almost went out of business at Goldman Sachs. We're a big firm. We invested about $7 billion in the fourth quarter of 2008 and first quarter of 2009. Every dollar that we invested was agonizing, absolutely agonizing. We're only a year and a half away from that. I wish we invested $30 billion. We all wish we invested $30 billion. And by the way, to put it in context, the buyouts 3 years before then that we were looking at, that these were big companies, $10 billion, $20 billion companies. We got to know the management teams, and they were really good management teams. We liked the thesis. We just didn't pay that price, so somebody else would beat us and pay that price. The senior debt, so the most senior part of the capital structure, when that world cratered, that debt dropped down to give you kind of 18, 20% returns. And yet, we were all, very anxious to invest in the equity during. You try to make the most informed decision you can, and then you have to commit resources, and then stay with it over a long period of time to make it through. And that's where, look, that's the debate everybody has today. When we're, like I said, going out spending money is easy. Spending money in a smart way, in a thoughtful way that has real impact and lasting impact, that's hard. And I think it's just a matter of making sure you do your homework and really understand it as best you can. Have a bunch of smart people, because one person's not smart enough, and have a bunch of smart people around, listen to those smart people, and then make the decision, then make that the right decision over time. And then, you know what, suck it up when you lose, and recognize you've lost, and try to get more wins than losses.
Jack, since you bring the dollars to the table, and certainly to run and grow a company, you need a good management team. How do you work and develop that to bring the management team to the table in the company that you just acquired?
Yeah, well, the one that we're involved in now, the two guys there over the last 20 years built the company. We won't find anybody better on the planet to run this business. So in our case, look, I know I'm a deal guy. I know I don't run companies for a living. So our philosophy is to find guys like Bob who run companies for a living and have developed that skill set over decades. And once again, be smart enough to know that we don't know what he knows and just give him the reins to go off and do it. So for us, it's really relying on the people that we know and the reach that we have out into other companies to be able to team up with somebody who brings that skill set, right? To find terrific operators, to put capital behind, and then work with them, knowing what. And look, we do have good perspective because we have a wide variety of companies that we're responsible for, and we get best practices from that. And we also know capital market stuff. We know the strategic side. But we don't know a whole host of things that it takes to make a business successful. And so then we find those managers, start off the deal with them, and if they work out, great. If they don't, we do take them out and have to bring somebody else in. And we do that through the network that we have throughout Goldman Sachs. I'll tell you, one of the things that makes my job a little bit easier, as I mentioned, Goldman Sachs employees put a lot of money into our funds. We're a team culture by nature. I could call somebody sitting in Dubai at Goldman Sachs right now and ask to get in to see somebody, and they're going to be responsive to me right away, just by nature of who they are. But the fact that they have a lot of money in our funds makes them even more cooperative, right? So we just have a great network, and we're able to use that. And then we have relationships with people in business at a very high level that we can lean on to bring them in. And so